If you're like many of us, then the daunting task of taxes is something we try to avoid until we either find ourselves desperate for some extra cash or until we are very close to the filing deadline. Before we jump into the basics of how to file on your own, let's take a step back for a second. Away from the exemptions, withholdings, W 2s, 1099s, R2D2s, Schedule A's, deductions, filing status, and all of the jargon that tends to keep us at a distance from claiming our own money. Now, for just a second, imagine that you were the government in charge of a small group of 10 people on an island, and you had to figure out how to tax each person's income in a fair way and then use that money to enhance the quality of life on that island. Now, you have to consider what is fair since each of the 10 are in different stages of life. Two of them are married to each other and both earn high incomes. Three are retired islanders with some money in the bank. One is a single woman who has a very low income with one child. One is a middle aged man with no income. One is a middle aged man who doesn't work but has more money than the other nine put together. And one is a single middle aged woman with an above average income. If you start putting a plan together for how to fairly tax all 10 people, you'll start to quickly see all of the variables you must account for: income, money you already have, ability to work, age, people trying to avoid taxes, some who work for businesses, some who own businesses, some who don't make just enough money to live, and countless other types of scenarios. Now, take this perspective, this lens of viewing taxes and how to tax people based on their situation, and hold on to it as we walk back to conquering our own tax territory. Now, we need to first ask ourselves, should I file? Is it even worth all of the hassle? Let's put it this way: in most cases, part of your paycheck goes straight into the government's pockets every time you get paid. And filing helps you to get a portion of your money back. So, yes, you need to file to get the money that you worked hard for. Okay, now what is a little less obvious is, where do I start? This is the part where the path starts to branch a little depending on your working situation. But not to worry, because regardless of your situation, everyone before filing needs to do two simple things. First, gather all possible paperwork that has documented any money that you made in the tax year, recorded donations like charity, goodwill, churches, nonprofits, etc., documented mortgage and interest payments, or documented investment information for any money made off stock, dividends, etc. And the second step that everybody needs to do, regardless of their situation, is decide which of the three most common ways to file is best for you. The first being using tax prep software. The most popular of these tend to be TurboTax and H&R Block. We have some other resources at the links here, such as Free Tax USA. And if you make $64,000 a year or less, then the IRS provides this free online option to file your federal taxes. The second option is pay for a tax advisor. And the third option is to file manually on your own, which are shown in the IRS steps here. Now, the advantage of paying a little bit of money for the tax software is, after gathering all of your paperwork, you're more than likely ready to let the software guide you from start to finish for preparing and submitting your filings in a way that's easy, intuitive, and simple to understand. Now, all of the service providers that I previously mentioned, such as TurboTax and H&R Block, have been around for quite some time, and they've refined their products to make it pretty easy of a filing journey that can be done in a matter of about 30 to 40 minutes. I would recommend this route if you have a fairly straightforward working situation where you work freelance or your employer provides you a W 2 and you don't have any special investments like rental properties, etc. Now, if you have a slightly more complex tax situation where you own a business, invest in real estate property, own multiple homes, then it may be worth the cost to find a trustworthy tax advisor who can help you get the best return possible. Just so we have some concepts in our arsenal before we go to file, let's take away some of the hype from these words that tend to make us overthink taxes. The first, deductions versus exemptions. Simply put, exemptions decrease your taxable income, and the amount depends on if you're married, have kids, or have other dependents, otherwise known as your filing status. Deductions, however, decrease your taxable income based upon special expenses that you may have had throughout the year, like interest on student loans. So, both exemptions and deductions lower your taxable income and thus lower your taxes. And as a quick bonus, tax credits simply mean that you get to subtract the amount of taxes you owe directly rather than through a reduced taxable income as you would with deductions and exemptions. These typically result from expenses that the government sees as beneficial to society, like adoptions and child education expenses. Now we'll take a quick look at tax brackets. Although this is a concept that is rather intuitive, what is often overlooked is how it is applied. If you are a single filer for the 2016 year and made $50,000 before deductions and exemptions, then that $50,000 is going to be taxed in chunks. In other words, your entire $50,000 won't be taxed at 25% just because you fall in that associated tax bracket. Instead, your income will be matched to the bracket and be taxed accordingly. So in this case, your first $0 to about $9,300 will be taxed in the first tax bracket at 10%. Your next $9,300 to about $37,000 will be taxed in the second tax bracket at about 15%, and then the remaining $12,350 of your initial $50,000 will fall into the third tax bracket and will be taxed at 25%. A lot of times, after people go through all of this effort, sorting, organizing, and calculating, some finish filing only to find that they owe a large sum of money that they have to come up with, and then others find out that they'll get a huge refund. However, the sweet spot is in the middle of these two outcomes. Because in traditional employment, the best case for taxes is that you set aside just enough money from your paychecks so that you owe little to no money to the government after filing, or even get a small return. This way, you go throughout the year with as much of your money in your pockets as possible, while also giving Uncle Sam the right amount of taxes, without essentially giving him a free loan by giving him too much money. And this is the basic concept of tax withholding. So, remember that W-4 form that you had to fill out when you first started your job? That is simply the form used to determine how much of each paycheck your company will set aside for you to use to pay for taxes. So, when you fill out that form, make sure you are withholding the correct amount, which you can estimate with the free TurboTax withholding calculator here. Now that we've cleared the air on all of these terms and concepts, go claim your money. And if you still have questions for your particular situation, or are curious about additional terms and methods, any of the resources provided in the More section of this video will help bolster your ability to tackle taxes. Until next time.